So part 4, let's have a look at this D1 chart so we can actually look at the nearest candles to us and draw the levels on there, the low of that previous day, which would be Saturday, and the high of the previous day on the top of that green candle there. And we can see, what can we see from this? Well, it was bullish. The histo tells us it's bullish as well, below zero, so we know we're in a pullback. That's obvious anyway by all of this trend line stuff on here. So we're looking for longs really. Now we get into the meat and potatoes of this stuff. You've got a high, low, lower, high, lower, low. That's these two red candles here. And what do we know if that breaks and closes above the high? That tells us longs are on this H4 chart. But what also have we got here is a low, high, higher, low, higher, high. Two green candles. That closed down there, so this was bearish. Categorically, that's how I use these indicators, or this method. So we can draw that there, and that then becomes support acting as resistance. Well, it's not held to the long side. So we've got a very, very bearish long looking chart here, and as you can see, the histo is telling us that. My little Indy's risen above zero as well, hasn't closed yet. We've got 41 minutes till this that's not moving, so it may not be working on this. I'm not sure it works on the Bitcoin, because I don't trade it on the daily. And this is a demo chart, guys, by the way. I did mention that in part 1, but you probably haven't watched that. So yeah, I mean, you know, the charts are starting to get messy now, but you know, under normal circumstances I would be drawing lines on the highs and lows of the H4. In fact, we might as well put a low on that H4 red candle, you can just see there, and we might as well put a high and low on the previous little green candle. You just see under the thing there, descending trend line I should say, and we need to look at any potential resistance that's not been closed above. So we can put an H4 on that red one there, and we can, because these are discounted because the highs have been closed above now, and we can put a level on the top of that green candle there on this H4 chart. Oops, I put the wrong one, the green, but it doesn't matter. There. So we've got an H4 high that we need to close above really if we want to consider going long on this. And what I'm doing now is we're talking about what we could potentially trade on the H1 chart. But the H1 on Bitcoin is a load of is debatable whether you actually cover your spread, and that's what I meant by that. Not trading Bitcoin. If you looked at the previous videos, don't really want to be trading Bitcoin in a short term trade, because whilst it does move monster moves, you certainly don't want to be risking getting involved in trading this on the lower time frames. It's a long-term trade currency, longer time frame. I'm normally trading on the 1 minute and the 5 minute and stuff. Interesting to see now we've still got these gaps, trading other pairs on the 1 minute and 5 minute. I mean, I'm a scalper and I love scalping. It suits my personality. You must trade what suits your personality, guys. That's something worth mentioning. So what can we see from H1? Well, we can look at H1 now, and we can start to see gaps that we could attack. Now this is this is what I like to see. If I was trading another pair, this would probably be a 20 or 30 pip gap, and I would be all over this like a rash. And let's have a look. 17,000. So it is, once the spread's taken out of account, you've still got 14,000 or so pips of potential profit to that level. So what else do we need to do? Well, we know we're bullish on the daily, we know we're bullish on the H4, we know we're in a retracement from the down move, so we are trading against the major trend. But if we start to see this scenario where the histo breaks above the line, and we get the confirmations that we need on the H1 chart, which unfortunately on this one we can't, because this is the high, the low, the lower high, the lower low. So we'd need a break and close above that. But if you were an accomplished trader of this method, then you can trade to that level using the lower time frames. But ideally, in my normal trading environment, I would want this to be a shallow red candle here, and then I could place a yellow resistance level on the top of that. Once we'd closed above it, watch for a little pullback, and then enter to that level there. I hope that makes sense. So let's have a look at the 30-minute and see what we can see. Unfortunately, because of the volatility of this pair, and this is another reason why you can't trade it, there's nothing really in there. There is a higher low here, low, high, higher low. This has been broken and closed above there. I hope that makes sense. High, low, lower, high, lower, low, low, high, higher, low, higher, high, and close. So and then pullback, as you can see, which I've told you in the previous videos, almost always happens. And then and it doesn't matter what time frame you're on. So if you get this close and break on a weekly or monthly time frame, you've got a good long time to consider going long, and you've got a good high probability possibly of trading that short as well. And then so we can see this is broken up, and this is how I trade these candlestick trends within trends. So you're using the 1 minute chart to enter a monthly reversal. That's what I love about this thing. You're trading trends within trends. So the 15-minute, what can that tell us? I better draw this to a close, this one. High, low, lower, high, lower, low. That was the confirmation there. So then we've made this lower, higher low that I talked about, and we've confirmed there. We did confirm to the downside, broke and closed below that low, high, higher, low, higher, high. I hope that makes sense as well. So we've had to categorically break and close above this level here, high, low, lower, high, lower, low, in order to continue to the north side. There was a move there. Remember, this is not a valid, so there was half and half there, not quite half. Take the 3,600 pip off that 5,300, and that would have been your profit, the difference. And it would have been profit, that's all there is to it. And notice here we've got the 1 over the 3 MA now, and it did actually, it was a valid one. So this is how this method evolved, and it is my own method, and it's taken 15 years to get to it. Well, it didn't actually. It took about, I've been trading this method now for probably 10 years. It took about 5 years to get to this. So, and you can see the volatility on the RSI has started to creep up as well. Anyway, I'm going to call this video to an end now, because I don't want it to fail and waste my time. Thanks for watching, be safe, and all of my videos, every one of them, is not a trade recommendation, it's just for educational purposes. Little disclaimer there.